So, on today's video, we are going to continue where we left off. Even though I did share all the gems that I wanted to share with you guys. But on today's video, we are going to be strict into it and we are going to break down all that we have to break down so you can have a clear mastery and so you can have a greater knowledge and understanding of how to spot out your support and your resistance, how you can capitalize every time price is on support and resistance, and how you can win trades even though you are still going to lose trades when we're trading on support and resistance. So on today's video, I want to share with you guys how you can strictly execute or how you can put your money to work on support and resistance using candlesticks and support and resistance zones, right? But before we get any further with the video, traders, make sure that you like the video, you subscribe to the channel, you turn on the notification bell so you can be one of the million viewers who watch our videos and gain the gems and the knowledge that they deserve. If you want to be part of our COT Academy team, we have opened up three exclusive mentorship services. We're having a 3-day one-on-one service, we're having a 1-day one-on-one service, and we're having a 30-day virtual mentorship session. So you can choose which do you prefer and which one COT Academy to assist you with, and let us do the rest from there. But without further ado, guys, let me share this wonderful gems. Let me put game in someone's trading journey, and let me make sure that you level up and boss yourself up and be 1% and professional and profitable like you're destined to be, using the gems that we share and using the gems that we know on the COT Academy team, right? So we still are working on gold, guys. Don't get me twisted or don't get it wrong. We still are working on gold. But like I said, today we strictly are going to see, or we strictly are going to learn how you can put your money to work using candlesticks and using your zones, which are your support and your resistance, right? So we can tell, or we literally understand that where is this now? That this is our first zone. This is our first reaction that price has printed out, and you guys understand that on our first reaction we don't put our money to work, or let me just say it's not a confirmed support or a resistance until we're having multiple reactions, right? So this is one of our first reactions, right? And then price pushed and came back again. This is our second reaction with a clean double bottom pattern, right? Reversal pattern. And what the price do from there? With a push to the upside. This is our first reaction on our resistance, and now, which is our third reaction in total, right? And having price pushing to the downside. This is our fourth reaction, even though price gave us a breakout and a break above, right? And then this is our second reaction on our resistance. This is our third reaction on resistance. This is our fourth reaction on resistance. This is our fifth reaction on resistance, and price led what? Price pushed to the downside. So we had a break above and we had a break below and a break above, a break below and a break above, and price gave us a clean retest here. So this will be our third, fourth reaction on our support, right? And what happened from there? Price led moving to the upside, and this is our sixth reaction on our resistance with a rejection candlestick. And what did price do from there? Had a push to the downside. And this is our fourth, and this is our fifth reaction on support, and this is our sixth reaction on support. And obviously current market price, having our seventh reaction on resistance, but we don't share on that one, right? So you guys can tell that, okay, price has reacted multiple times on support and resistance, 12 times in total, 6 and divided by 2, 12 times in total, right? So starting on support, remember guys, that every time price gives us a first reaction, we will never say it's a support, right, until we have a second or a third reaction, right? So from the first reaction, we couldn't put our money to work, right? Coming to the second reaction, you can simply tell that before price led into being bullish, we had this bear momentum candlestick, right, which was obviously pushing, which was pushing on our support zone, which was pushing and reaching to our support zone, right? And then the second candlestick, we had a continuation bear open candlestick, but unfortunately it flipped after it spiked on our support, right? And from there, what price did do? Price had a candle flip from a bear open, leaving a rejection and a flip, closing with a bullish open, meaning obviously from there we were looking for first or few indications or first few signs of price giving us a possible reversal, right? We move to the upside. And so once we had this reaction, again had a bear candlestick, and then the fourth candlestick, which was our confirmation entry, price came back again with a bear open and a candlestick flip, closing bullish, obviously giving us an indication of a what, of a move to the upside. So how you could have put your money to work right here, it's once obviously, because we're having those three candlesticks, it's once price gave us a break above of what, of those three candlesticks. Let me do this so you can see it, guys. So I don't want this one on a trend line. Yeah. So once obviously price gave us a break above right here, once price gave us a violation or break of the intraday candlesticks with a momentum candlestick, boom, pushing to the upside. This is where we could have put our money to work with a 5 pip target, with a 5 pip stop, and obviously not understanding where price might have led, we could have simply put our target right here, targeting what previous highs. Do you guys get that? So this could have been our first take, right? Because we understand that we're having a bear engulfing, we're having price having our first reaction on our zone, and we're having a push, and price came back again the second time to our zone with a bear engulfing candlestick, and the second candlestick having a bear open, touching, spiking our resistance, spiking our support, and having a candlestick flip, right, and closing bullish. The coming candlestick having a bear open and a bear close, right, but still above our support. With the third candlestick, which was our confirmation candlestick before we took our entry, this could have been our entry candlestick. This was our confirmation candle. Again, bear open, touch on our spike on our support zone, and a candlestick flip from bear open to bull open. And what do you do from there? We wait for the coming candlestick. So the entry candlestick, once it broke above our three current price candlesticks, that was an indication of a possible move to the upside. And once you see it, you can tell that price did as we anticipated, because we were not sure where price might have reached. We could have took our price on previous highs, right? So this was our first entry and the first win. Pushing to the upside, when we now create our high, right? Like I said, guys, every time price creates our first reaction on a zone, we don't quickly jump into it, because we're not sure if price has created a support or a resistance, or it's just a high that might be violated, creating new highs, right? So from this one, we were not going to put our money to work. Price had a push to the upside, to the downside. So coming back here, because price had a breakout, right? Price had a breakout and price had a break above. So let me teach you guys something that many traders fail to understand or fail to know, right? So from price giving us this breakout, you can tell that obviously price was now starting to push to the upside, even though price gave us a breakout, right? So once we had this candlestick breaking above and closing above, and a coming candlestick closing above, and the next candlestick trading above, and this candlestick spiking our zone, this is an anticipation of a what? Of a break below, break above, retest above, look for move to the upside. Break below, break above, retest above, push to the upside. You guys get that? So when you now see it, this could have been our entry candlestick once this candlestick has closed, because now we know that okay, price was pushing to the upside with a breakout and a break above, with the coming candlestick giving us a retest and still spiking and closing bearish but above our zone, and the coming candlestick being our momentum candlestick, which still led into a close above. So once this candlestick has a full candle close, the next candlestick is strictly our confirmation, our entry candlestick, right? Same thing, guys. 5 pip target, 5 pip target, and obviously now that we understand that price has created this high, this could have been our TP right here. This could have been our TP right there. Focusing on what? Focusing on our zone, because we know that okay, price has created a high, and obviously prices created a low. What happens in between the support and resistance, or this intraday zones, will never forsake us, or will never make us be or doubt what might happen next, because we understand that okay, prices reached a certain zone and prices giving us a reaction on that certain zone. And what do you do from there? You just put your money to work after receiving confirmation based on how you approach the markets, right? So this could have been our second win, right? Let me do this for now. So this could have been our second win. So coming back here, because now we understand the prices gave us a first reaction, now we're having a second reaction. So how we could have put our money to work once prices reached our resistance, it's once price gives us a fill to break above this high, giving us the indication of a what, a possible double top, right? So now how we could have put our money to work, it's pretty simple, because now we understand that okay, price was having a bullish momentum, or price was just bullish from our support, right? We now understand that okay, we're having now rejection candlesticks, right? Prices started to reject, prices rejecting, and once prices given us risk rejection, the entry candlestick could have been this candlesticks once we had a bullish open, and price spiking our zone, our resistance, and from a resistance spike and a candlestick flip with a bull open and a bear flip. This is when we could have put our money to work, right? Because now we're having what, intraday moves. We're now having intraday lows that price printed out right there. So understanding that okay, price gave us multiple reactions, right? With bear open, with a open and a close, which is in a intraday zone, right? So once you understand that okay, price with this candlestick, we had a bull open and a candle flip, which violated our intraday candlesticks. And once obviously price has given us this violation of our intraday candlesticks, this is when we could have done what? We could have put our money to work below below our zones, like right here, below our zones, and obviously with a target of what? With a target of this very same zone. But in this instance, price could have been an L. This could have been an L, right? If you were strictly trading support and resistance, when you put your TP, when your entry is in support, you put your TP on resistance, this could have been an L. But based on how we day trade, we could have just took it some right here, only 1, 2, 3, right? So for now, we can say it's a win, because we wouldn't literally be holding it for that long, even though price gave us enough profit, or a 1, 2, 3, because that's what I trade. 1, 2, 1, 1, 2, 2, 1, 2, 3, right? So this could have been our second win, right? So again, price came back to our very same zone. So once price came back again to the very same zone, you can tell that our momentum is still looking bullish. So from the momentum looking bullish, you now can see that we're starting to have what? Bullish depletion in bear momentum. But let me explain what I mean, right? Because now we're having engulfing candlesticks, we're having engulfing bullish candlesticks, until price came to our zone. We started having small bullish candlesticks, right? Small bullish candlesticks, until this candlestick had a bullish open and a candlestick flip, leaving us with a pin bar, or an indecision candlestick. It's based on what you call it, but in this instance, I could have just said it's a pin bar, right? So from the pin bar candlestick, which rejected, and the coming candlestick still closing bearish, once price violated, once price gave us a violation of our what? Once price gave us a violation of our intraday zones, guys. Like, remember, intraday candlesticks, intraday lows or intraday highs, right? Once price gave us a violation of this intraday lows right here, with a pin bar candle, close and a bear candle close, and the coming candlestick violating our what? Violating our lows, indicating that we had a pin bar that touched our zone, or let me just say we have a pin bar that spiked our resistance, and the coming candlestick had a big candle close, and the third candlestick violated the two candlesticks, or let me just say those intraday lows. And from a violation of those intraday lows, you can simply put your money to work with a what? Clear indication that obviously prices below a certain zone. So with price being below a certain zone, still targeting what? 5 pips right here. We could have still targeted what? Still targeted our intraday lows right here. So this could have been our second win. This could have been our fourth word. Do you guys get that? So continuing with it, price came back again to our very same zone. So with price coming back again on our zone, we had an indecision candlestick which did what, which rejected our zone, and we're having the coming candle which was a bear candlestick close, and the third candlestick which opened bearish and flipped, and which opened bullish and flipped and closed bearish. Once this candlestick had a close below that candlestick, that's when we could have put our money to work. Still targeting the same thing, guys. Still looking for the same thing. Still looking for the same targets, right? Still anticipating the same targets, because we understand we understand the overall move, right? That how does price react and how does price move. In this instance, we could have took a word a 1-to-1 based on what our risk reward ratio 1-to-1, 1-to-2, and overall 1-to-3, right? We could have took a 1-to-1. So again, this could have been our fifth word. Coming back again, same story, same anticipation, same approach, same pattern, same time frame, same pay, and same person. Right? So still using the same thing, right? Again, a rejection, and a candlestick flip, which closed bearish. But here could have been a lose, because obviously we trade what once the candlestick closed bearish, thus we could have put our money to work right here, 5 pip target, and then we could have targeted right this intraday lows, somewhere right here, this intraday lows. But at this instance, this could have been a lose, just to show you guys the clear nature of how you have to trade and how you have to approach the markets. And even though you're having a clear approach, you will still take those L's, but it's up to you how you rebound from those L's, right? So this could have been our first L in 5 setups, right? So obviously, boom, L, we accept. So here on support, price gave us a breakout and a break above, a breakout and a break above. So once you had this break above and this retest above here, you can tell that obviously from what happened here, price has been doing what happening here, right? With a clear indication of what, of price giving us a break above and a retest above with a what, a bullish engulfing candlestick. Once price gave us this bullish engulfing candlestick, that's when we could have put our money to work, understanding the clear nature of what, of how you approach the markets and how you trade your support and your resistance, right? Because if I explain, we had a breakout and price came back with a break above, and once price stayed above our zone, we now had a what, a bullish engulfing candlestick, which gave us a what, a momentum into saying what, okay, price has done something like this, and now all we had to anticipate is look to be bullish, because we had a break below and a break above with a retest above and a bullish engulfing candlestick, which is our momentum candlestick, indicating to us that we are good to move to the upside. When you look at it, this is where we could have done what, put our money to work, targeting what, targeting this two highs, this high and this high, right? Still going forward, still going for a clean 1-to-1, right? So this is our 6th win with a simple approach. Price is above support, price is staying above support, and price gives us a bullish engulfing candlestick above support, an indication of a what, a possible move to the upside. Do you guys get that? So we still continue. So here you can tell that price gave us this rejection. Price had a push to the upside and spike on our support and still had a bullish close. So from price having a bullish close, we now had this word, this bear engulfing candlestick, which flipped or pushed to the downside. So once this candlestick pushed to the downside, we couldn't put our money to work based on two natures. Price didn't reach our support, price didn't reach our resistance, it just spiked. We need to wait for price to reach a certain zone, not to just spike. Let price reach that zone. Even though price will still spike, let it reach that zone and give you clear indications on what might happen from there, right? So from here, we couldn't have put our money to work because price didn't reach the zone, we only spiked, right? So push to the downside. So once we had this push to the downside, price gave us a what, a rejection on our support, right? Even though we had this bear engulfing candlestick, the coming candlestick had a bear open and a bullish close, which was a what, a momentum candlestick. So once this candlestick gave us a momentum candlestick, you can tell that, okay, from this momentum candlestick, the coming candlestick still reacted, right? And the coming candlestick still reacted. And what happened from there? Price hit a push to the downside. So here, you could have had two entries, right? Because you're having that intraday double bottom, right? And we're having that reaction on our support. Let me show you the first entry, and let me show you the second entry, which is the last entry in our video, right? So how to trade double top, right? Obviously, we have this high, right? Price has this intraday high, right? So from this low prices created and this high prices created, price still pushed to the downside. So from pushing here to the downside, we can tell that okay, we rejected our zone. So from reaching this zone, price gave us a rejection. And so from price rejecting with a bear open and a bullish close and a coming candlestick pushing to the upside, giving us a momentum. Once this candlestick had a close, this could have been our entry candlestick based on the simple nature, right? Based on our simplest approach and the simplest nature, and obviously with our targets being right there, right? Targeting our highs, right? So this could have been right there. So this could have been the first entry in this zone. And the second one could have been right there once price gave us a break above of this of this intraday zone. Let me do this for now so you can see. Once price has this break above, once price gives you a break above, because this high was violated and price still pushed below that high, right? Again, price gave us a violation candlestick, boom, momentum candlestick, and the coming candlestick bearish, and the coming candlestick bullish. This is where we could have put our money to work, because we don't take the trade on our first candlestick. We at least wait for the second candlestick, or two candlesticks, right? Once the first candlestick is in a zone, we need to wait for the second candlestick to confirm. Once the second candlestick confirms, then that's when you can simply put your money to work. Do you guys get that? And when you look at it, you can still tell that, okay, from the third candlestick, this could have been our entry candlestick. And once you look at it, still the simplest approach, still using the same approach, 5 pip target, 5 pip stop, and obviously 123, 122 target, right? And once you see this is where we could have put our money to work. So, guys, I emphasize one thing. You need to wait for confirmations before you can put your money to work when you're trading support and resistance. You don't have to take a trade on the first reaction on your support. You don't have to take a trade on your first reaction on your resistance. Wait for at least one or two candlesticks before. Wait for at least 1 to 2 candlesticks after your first rejection candlestick on your zone. And once you understand that, then your trading will forever evolve, your trading will forever be better, and you as a trader will forever be great. Because I don't get this nature why many traders don't understand the power of your support and your resistance. But all I can say is, after this video, many traders will benefit, many traders will hop back into support and resistance, and many traders will start using the power of your support and your resistance. Do you guys get that? But without further ado, that's your boy Harlem, King CEO T, and I'm gonna catch you guys on Friday on our trade breakdown video.